Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving ahead of non-farm payroll. We will be giving away your choice. We have three winners. Whoever guesses closest to the non-farm payroll number tomorrow, Friday, 7:30 a.m. Central Time. How many jobs were created in August? If you're watching this on Twitter, you'll see the link there. If you're watching it on YouTube, look below. If you're watching it on our website, look below. If it's on the email, if you're getting it from an email, you have the link there. So find that link, click on it, and in that link, submit your information, submit your name, submit your number, submit your email, and your guess for how many jobs were created in August. We're going to give away three winners, your choice of the Blue Line Futures Nike golf polo or a New Era hat, all embroidered Blue Line Futures. So get your guess in, three winners for tomorrow. Speaking of non-farm payroll, 850,000 jobs are expected to be created in August. There is a lot of talk here this week of new layoffs. Airlines, maybe if we don't get fiscal policy. Goldman Sachs announced something. Disney yesterday announced it. Shell as well. So the layoffs are starting to come together here. But fiscal policy. Can Washington put out a fiscal measures? Can they come together here? That's jacking the S&P back and forth below resistance. The NASDAQ below resistance. It's testing that resistance level. We can't really chew through there yet. But the House is expected to vote. They have a self-imposed deadline through tomorrow. Will they be able to get something together, and then can it get passed further down Congress? That's the real question, because it's all about fiscal policy. We saw price action in the S&P much lower after the presidential debate, but news that there was a glimmer of hope coming out of Congress, coming out of Washington, really lifted the stocks yesterday, back up to that big 33.79 in the S&P. That is the gap close that was covered from the post-Fed close there, where the weakness really started to kick in again on that wave down. So a lot of resistance up here, and we also have other data today. We had manufacturing data came in below expectations, that ISM number. We had the services on I think Monday, but today we had the manufacturing read and a miss. The final manufacturing PMI ahead of that also came in below expectations. So we're starting to see a little bit of the economy stalling out. Now, not only so, I mean, we've had manufacturing expand, but it was expanding from such dismal levels. It really was a very slow recovery coming out of the pandemic. Still in the middle of the pandemic overall, but one thing that is starting to show up is inflation. The Fed's preferred inflation indicator, the PCE index today, the core PCE index, 1.6, getting closer and closer to 2.0%. Yes, they're going to symmetrically allow this to run hot above 2%, but don't think for a second that you won't hear the argument, come into the news again, come into the headlines, that when will they look to bring up rates? When will they hike rates if we start to see inflation at that 2% level? Again, even if that conversation starts, it's not about hiking rates now, but they have a timeline going all the way out to 2023, and that timeline is going to start to shrink up a little bit. But right now it doesn't matter, because we're not there yet, and the Fed is remaining very accommodative, and because they remain accommodative, we are bullish the equity market overall. We don't like it buying into this resistance, but from a portfolio management standpoint, we like being long stocks. We think there's great value. We've been recommending, and we have been buying on the Blue Line Capital side, managing portfolios, have been buying through this weakness over the last month. We basically called the top, saying there was going to be a reckoning, and then that played out. So there's been a lot of value. Good support levels have been achieved, 32.50 in the S&P. The market's responding accordingly. We do think that the election, no matter who wins, is going to be, supportive to the market, because right now, overall, the market hates uncertainty. And coming out of the election, we're either going to see less uncertainty or some certainty. And if we don't get fiscal policy before the election, we're going to get it after the election, and the market's going to like that. So today, on a little bit of fiscal hopes, we're starting to see the stocks that everybody wants to be long anyways move higher. Tech, I mean, you get the behemoths moving up, a lot of good price action in tech right now. The NASDAQ still, though, is getting resistance. But overall, coming out of the election, we really have some strong bias. We think the market's going to move higher through the end of the year. We think yields could rise with that too, as you get more fiscal policy, you get more debt out there. Washington has been shy on debt because they're all jockeying ahead of the election, and that's going to change. Let's jump into the charts. I could talk all day, but let's see what we're looking at here and jump into the charts. The S&P. Here's an S&P chart we're looking at. And we overall have this resistance here line. This is the 33.79 post-Fed close. And then we, over here too, above here, have the 50% retracement, 33.92. And we can't really get through there. 33.88 was the high here today. Can't really push through, can't hold out above. That resistance has been pretty good. Until we get more certainty on fiscal policy, it's going to be tough to see this thing break out through. Maybe a good number tomorrow, supportive to the economy, could help push it through, and you get a little bit some buy programs stepping in. Take a look at the 30-minute, though. You had a little sell-off today. Yesterday's settlement, quarter end, last day of September, 33.52. What we do, we pinged it right on, 33.52, and bounced up. Great swing trade there. All at that support level, these gaps typically give you a great trade opportunity. So it's nice seeing it highlighted there. But again, we're not extending higher. 33.88, the high of the day. 33.92, the 50% retracement of this whole move. And then as well, 33.79 is tough time holding that above there. Still, that gap is being respected. Now, the NASDAQ, similar thing, 50% retracement, whereas the S&P is holding resistance at this 50-day moving average. The NASDAQ is out above it. Pretty good here the last couple of days. Trying to extend those gains today, still 50%. Our major three-star resistance to the NASDAQ, 11,550 area. So that's getting respected. You know, I mean, overall, like we said, it said today in the Morning Express, can't really chase this action. We need a confirmation. We need to close above these resistance levels. Some buy programs could step in there, but you can't chase it. If you were bullish, you had your opportunity buying that settlement from yesterday because it was retested. So you don't want to get greedy, don't want to press up here, but overall, we do like the market. We just got to, find good value or confirmation. Now let's move on though. Let's take a look into to gold. Now we've also said a couple weeks back, a month back or so, time flies. So it was really middle of September. Do not chase gold at $2,000. And lo and behold, we found ourselves a lot lower, really coming in right into our buy zone, 1855. So if you are long here, it is holding out above major three-star resistance for settlement today, 1901, 1907. That's great. But how much more can we get out of here? 1933 area is really going to be, to 1940 is going to be our resistance. Now, this was a nice wedge pattern. We broke down through there. Tremendous resistance up to 1950. They got the retracement, I think it's 1937 to 382. So until we get and close out above that 382 retracement, it's going to be tough to really stick with gold. You want to be trading into that level, capitalize on winners there, and overall too, what does the dollar do coming out of non-farm payroll tomorrow? Does it increase on a good number? I mean, the dollar has been very tough predicted on how it's react to the data. So let's take a look at the euro and the Aussie later on here as I go through, but let's take a look at silver first. Very similar here for silver. It's below that 50-day moving average, and we've said it for years. I love saying it. When silver's below the 50-day moving average, it stays below for an extended period of time. When it's above it, it stays above it for an extended period of time. It sounds cliche, but it's true for silver. And really, I first want to really point out here, we're in a seasonally softer time of year for the metals. Precious metals like to top out August through September. This is right in the thick of it. They really don't pick up again until late December. And I talk about this every December. It's about December 23rd. You buy gold and you hold it in through January. To the end of January, you made money 14 out of the last 16 years. That's when you want to be ready to buy gold. So right now, there's good trading ranges, very, very good tape to trade, but don't get married to positions quite yet unless something fundamentally changes out there. Maybe we get a much bigger fiscal policy than anticipated. That could definitely light a fire under gold and silver. Until then, respect the resistance levels. So again, you got 25 bucks. For us, 24.48, 24.50 was an area that we wanted to capitalize on silver. We talked about it at the desk here for a bit. So silver, $25 would be tough area. Close above there is great. You got to get above 50-day moving average. That's your headwind area in silver in the near term. Very good trading range though. So it's great trading range. What worries me more about gold and silver right now than anything is the fact what we're seeing here in copper and crude oil today. Commodities in general, copper getting hammered, just taken out the woodshed. What is it going to do after this day? If it's down today 15 cents, tremendous loss. We saw some pretty big losses. I highlighted them here in the chart back on August 7th and August 13th. Now, at that time, I was slightly bearish on copper, positioned with some butterflies. If you go back, you remember what I was talking about there, and I never got that follow through down there. Very disappointed. Each time it sold off so sharply, 50-day moving average came in to keep it, and then on top of that, it just bounced back, and then you never looked back. And both those days turned around on a dime, which rare to see. Now, will it do that again? Difference here, we are below the 50-day moving average. However, we are running into that sell area, and we are running into a little bit of a breakout trend support line now too. So decent support down here at 283, let's call it in general. So what does copper do? If it bounces back tomorrow, we could be laying the groundwork here, similar to what we saw here. So keep that in mind for copper. Close below 283, close below 275, could get more out of it. I mean, that's 283, then support 275, and then I think good long-term value 268 in copper. But we got to see that the fundamentals behind it continue to stay. Growth in Asia, China data picking up. So let's see what happens there. So I mean, overall, got your support levels again: 283, 275, and about 268. Now, crude oil also down sharply here today. This is the December crude oil chart because I want to talk about crude oil for the long term. It's down 3.5% here today. Moving into a good support area, about $37 the December contract. 34 to 35 is our buy zone. We think that's a great long-term area for crude oil. But again, below the 50-day moving average. I mean, the 50-day moving average really in this pandemic year has helped you show some good trending. So now we're below it. What does that mean? I mean, it could mean the bears have a little bit of an edge here for a bit with it below 50-day moving average. Same way you want to fear here for the copper. So keep in mind, we do think good long-term value here in crude oil, $34, $35. Let's finish off with the currencies. Now, as I would in the euro, you do have CPI data tomorrow coming out of the Europe early. Contraction expected again. So, if we start to continue to see inflation contracting out of Europe, they're going to have to do something. Remember first, too, I want to tell you here, remember they have not ratified the EU budget that sent the EU the euro skyrocketing through the summer. So if we continue to see the data, the inflation data contracting in Europe, no budget, Brexit, this doesn't pave a very good path for the euro coming into the end of the year, which also increases the value of the U.S. dollar, which in turn weighs on gold, plays in that narrative for gold being softer through this time of year. So remember that. Let's take a look at the chart again. 50-day moving average in the euro, broken through it last week. So keep in mind we're below the 50-day moving average. These are all daily charts. And now you have a trend line here as well. Good resistance in the euro, right about 118. Could be a good tradable area. You start closing 118.25 or so, close that above there. Then yeah, it's breaking back above that 50-day moving average. Could be bullish again. But while below here, looks like a seller rally sort of move. Similar with the Aussie dollar. Very similar pattern here. Below the 50, coming back and retesting resistance. Keep in mind there. So this is good resistance here. If you were a dollar bull in this range here, tough to take positions on ahead of non-farm payroll. Wait for non-farm payroll tomorrow. But these are areas that looks like we've got some rallies off lows. Now we're testing resistance in the euro and the Aussie dollar. Again, hey, check out, guess the number, sign up, put your name in, put your guess in for non-farm payroll, win some free gear here. We're giving it away. Call us too. If you don't win, call us, contact us. We'd be happy to send you some gear. Remember though, we're always here to talk about the markets, always here to help you with risk. Just give us a call, 312-278-0500. Remember though, futures trading involves substantial risk of loss. It's not suitable for all investors. Thanks a lot.